My special guests today are Leon Noble and David Curry. Leon is the co-founder and CEO of InvestorIQ. He enjoys educating people on finance and engaging in healthy debates around finance, politics, and sports. He is a quantitative investor with 27 years of stock investing experience, and he uses data to drive his investing decisions. We also have David Curry. David is the co-founder and CEO of InvestorIQ, and he is a data and software technologist with 24 years of industry experience. Through his technical leadership, David has successfully implemented trading systems that transform organizations. Welcome to the show, both of you.
Yeah, thanks, Andrew.
Thanks for
Appreciate you
having
having
us.
us.
Yeah,
Pleasure.
my pleasure. It's exciting to get a double interview, to have both of you here and get both sides, the tech side and the business side. Can you just start by telling us a little bit about your backgrounds and how that led you to found Investor IQ? Like, what is the platform? What's it do?
Yeah, so Investor IQ was an idea of mine that started. Well, the concept started, I don't know, three years, maybe 3 years ago, and it was born out of anyone who's a retail investor knows the frustrations of doing stock and equity research. You're jumping between Yahoo Finance, Google Finance, your brokerage, spreadsheets, what have you, to try to call all this information and have it in one place. So it was born out of really that frustration. Another part that was born out of, so I went through that frustration of jumping around all these different applications. I then subscribed to which is now a competitor of Investor IQ. This was in 2018. I remember I subscribed in August 2018. I paid, it was close to $2,000 for the application. I literally used it five
Hmm.
times in 1 month. After that month, I dropped it and I was like, you know what? I just spent 2 grand on nothing. I need to figure this out. Like I know I can build because I know what I was looking for. I know what I wanted. I just didn't feel like there was anything out there that fit my needs. So I was like, you know what? I can build this myself. I have a technical background. My background is my degree is in information systems management. So I have a technical background. I worked at Accenture. I worked at Booz Allen as a business analyst. So I have that sort of background. So I can do that. I can do this. I went about kind of fleshing it out, kind of specking it out on kind of things that I'm looking for. But I'm not a coder. I will say I'm not an actual coder. That's where my good friend Dave, who I've known for 20 some odd years, brought him into the picture. I had a really, really rudimentary design of what the system was. And Dave and I, over the last year and a half, say 2 years, have really fleshed it out, built it up, and kind of brought it to where it is today. And we're just now getting to the alpha stage of releasing it, which is basically the really, really early stage of something that's functional. So we're at that point now. And the problem, I mean, what it really solves is kind of what I spoke to was just the annoyance and the headache of doing stock and equity research, and trying to make it easy and function. Now, I will also say there are apps on the market that do that. The one I subscribed to claimed that it did that, but it didn't do it well. Most of the ones that I've seen don't do it well. They almost seem like hobbies to me, right? Like it seems like a guy that just coded up something, put it out there, and said, "Okay, here, this is what you use to do your research." And I didn't find any of it to be, from my opinion, really well thought out, really intuitive. And another big issue is risk, right? Risk management. None of these, from my experience, none of these addressed risk and/or risk management when picking equities to invest in. So that's really what how Investor IQ was born, from my frustrations of just looking for kind of call and research equities, but also the risk portion of it. I've taken quite a few hits from some of these platforms because again they don't address risk. And even in my own research years ago, I didn't really understand risk myself. So we're the core of Investor IQ. I like to say at its core, it's really a risk management tool that then has equity research built on top of it.
Wow. So you common founder story of you had a problem that stuff didn't work the way you wanted it to, and you set out to make it easier for yourself, but also for others who were in the same situation. And so you've got this platform. It's investoriq.ai. If you're following along, you can go check it out. And so tell me a little bit about how the experience is different. If I've experienced what you're talking about, trying to use Excel, I've got Google open, I'm in 5 different brokerage apps, and I'm like, what
Yep.
am I
Yep.
doing here? It's a mess. Am I taking this seriously? How does your app change that if someone is to to use that instead of, oh, I'll just poke around on Yahoo Finance and then I'll trade in Robinhood and then I'll go over here and try to track it in Excel? How is it different?
So good question. So I think what every app is trying to do is actually trying to, like you said, kind of bring everything into one place. But what I've noticed about that is, it seems to me, so one, a lot of these apps seem like they're just kind of hobbies, they're not well thought out, and two, they seem to want to really brag about how much data they have, right? So that, like, on the front facing page has all this information, all, the current ratios, the fundamentals, the ups and downs, the volatility, like all this stuff that doesn't help you actually pick the equity you want to, pick the appropriate equity that you want to buy, right? So what InvestorIQ does, it abstracts all that away, right? It's a very clean interface. All that bragging about data, that's in the background. That's on our back end systems. On the front end, we go through our process of, first we go through our ranking system. Well, actually, let me take a step back. First, one of the things that we do that I find to be unique, and I don't think I've seen anywhere else, is we actually filter out what we call poor equities. And these are equities that have things like bad volume, wide bid-ask spreads, and just that are really, really volatile. So we actually filter those out, right? So that's our first step. We actually get rid of a lot of just trash or garbage in the beginning. Then the next step is it goes into our algorithm that then ranks based on our model, ranks the equities in sectors and industries. But the key point is that they're ranked at the end risk adjusted. That's the main point, risk adjusted. And that's key because, again, one of the things that I've seen a lot of these systems do, like for instance, right now, because we're building this, we're poking a lot of different apps, and these apps put out there, they're like, see the things that are moving the greatest today, or see the things that have the greatest movement overnight or the greatest volume, and you look at them, and they're like penny stocks. They're like $2 and $3 stocks that have huge volume. They're moving 10-12% per day. It's like, I mean, it's the antithesis of risk management. So in really what I call the shiny object syndrome, right? They're trying to make this thing look really flashy, look really sexy to get your attention, but it's really not helping you with investing. So our main point is to again filter out all the poor equities, then rank based on our model, risk adjusted, and then present that to the user. And it runs every day. We run it really 24 hours, but we run it right now once a day because we're in the alpha phase. But it'll literally run every day, 24 hours, doing our ranking, doing our modeling daily. And another portion of that also is that we have an AI backend system too. So with the AI, what our AI system actually does is once we have our rankings in place, we then apply our AI models to that. And the benefit of that is that Dave and I were just talking earlier, is that when things are ranked, most systems are kind of static, right? Like, okay, you say it has a ranking system, and it's going to give it 1 to 10 based on whatever. What we're doing with our AI models are actually doing is they're actually taking our rankings and improving them, right? So we look for things like correlation patterns that our AI will look for and address those. And for like an example would be like let's say for whatever reason right now, let's say that the data point current ratio, right? For whatever reason, current ratio is correlated to equities that are doing really well, right? Our AI model will pick that up. But let's say in 6 months, for whatever reason, now it's return on investor capital that's correlating to equities that are doing really well. Our AI will pick that up. So our system actually moves and grows with the market. It's not just a static system that at one point in time says, "Hey, buy this." No, that's good now, but in the future that may not be the case. So that's just an example of one example of kind of how our system kind of grows and moves with the market, because we know the market is a living, breathing beast that changes daily.
Right.
One other quick point to that, to pick up on what Leon said, is that so all of this stuff happens in the background, but going back to the point about the user experience with being inundated with data, we try to abstract a lot of that. So the algorithm runs, it does all the ranking and stuff and presents you with stocks by industry and sector and whatever. But we're also trying to use contextualized information so that like why this is good, or what's the next step, like what should I look at, what makes this important. So one thing that we're trying to do is not only present traders with equities that we believe have a good risk-reward balance, but also educate them on the cues to look for. What are the characteristics that make a good stock? So it's a balance between giving information, but also trying to abstract information just to focus in on what the most important things are.
Yeah.
And
And
just one other point kind of on that is how I said earlier, how we actually abstract that, we filter out what we call poor stocks or equities. We actually don't get rid of them, right? So we actually
Mm.
put them in like kind of like a penalty box, right, for a time being. But as their risk profiles improve, we then will bring them back into the system and give them a ranking. So we actually monitor those because
That's
for
right.
whatever reason right now they're bad, but they can improve over time. For whatever reason they can have earnings that come out better. They can have change management. They can introduce new products that Wall Street says, hey, this is actually a company that I want to look to and invest in. And as those risk profiles and those risk data points improve, and they meet our threshold, we'll then introduce them back into the system. So that's another kind of aspect of again how we're addressing risk for our users.
Wow.
Hmm.
So I, as an investor, I don't have time to keep up with all of this. It's
Yeah.
exhausting to try to manage all the information and data, and it's going to lead me to make mistakes. And there was a Wall Street Journal article recently about new investors and how the cost they paid in the last few years coming into the market just by making bad decisions. And it
Mm-hmm.
sounds like you've this risk management piece is sort of separates the novice or the inexperienced investor who's just picking stocks from a
Hmm.
professional. And so you're basically the platform is going to allow an investor to invest like a professional to avoid risk and make smarter choices by condensing all the information, making it easier.
Yeah, exactly. So like what's going on right now in the market, I think I kind of feel like, we always want to have this thing developed like yesterday, right? But I feel like the current environment we're in actually is actually benefiting us because what we're seeing right now, we're going through a massive correction in the market, right? A lot of people have gotten absolutely decimated, as you said, who joined the market, during COVID, and what they're being introduced to now is risk, right?
Mm.
They took there was zero, there was like negative risk management taken over the last 2 years, right? And what they're realizing now is there actually are penalties when you invest in poor equities that have bad risk profiles.
Mm.
And so a lot of people are being introduced to that now. And I think the days of taking a dart and throwing it at the wall and your stock going up 30% in a year are pretty much over, or at least for the near future because of what the Fed is doing by raising rates.
Mm.
So yes, the kind of the thing you said about investing like a professional, that's kind of our goal. Risk management is the thing that retail investors know nothing about, they don't care about, and I get it. I didn't either. I mean, I've gotten burned years and years ago when I kind of started out. I just want to make fast money, right?
Mm.
But that's not how this game works. And so we're really trying to introduce that into our system, and introduce that to retail investors. One last point about that. So there's a feature that I developed like 3 years ago, what we call the risk calculator, and for me it's been a game changer. And so what it is, so basically what it does is it approximates the daily gains or losses for an equity position based on the amount invested. So what that means is if you have $1,000 and you enter into our risk calculator, it'll tell you, okay, your daily gain or loss will be approximately, say, $100, right? If that's too much risk for you, you can say, okay, let me lower that to $800. And
Mm.
now it'll tell you, okay, now your risk today your gain or loss will be about $65. You may say, okay, cool, that's for me. I'll do that. And so what that does is that shows that we're not giving investors like abstract like beta and volatility and implied volatility talking about risk. We're giving them actual dollar numbers with an approximate dollar range. And I've been using this for about 2 years, and within the range, it's about 96% accurate. That within the range, your gain or loss will fall within that range. So the whole point of this is that we're showing investors their actual risk in dollar terms before, keyword, before getting into a trade. Because as we know, most people get into trades, they realize risk once they're down 20% after a month. Then they realize, oh my God, this risk thing, this volatility thing, they lose their
Then
mind.
it's too late.
Then it's too late. Right. So we're actually helping introduce that before they get into the trade.
Yeah. Is it a bell curve that you could make your investments around where stocks fall? When you say 96% accurate, I immediately think about standard deviations. Is that what you're helping them find? Is where on that range of risk is the investment they're looking at? Where does it actually fall? So that they stop to consider that. Like I wouldn't even think about that as a newbie investor 10, 15 years ago. But the idea is, hey, as you move from you just got into this, because of meme stocks and GameStop and all this stuff, and you had
Hmm.
money to spend, and now you want to keep going with it, but you don't want to get burned anymore. Is the
Right.
idea to make it obvious this is what you need to focus on and make it
Yeah.
easy to
Yeah.
know?
Yeah. It's kind of twofold, right? So like you just said, make it obvious for what they need to focus on. So just kind of taking a step back. So I also work with I also have another group that I work with called Investors Education Academy. We're basically a friend of mine. We have a side company where we basically try to educate people on investing, right? Trying to show them how it works, how this thing can actually, grow your wealth, generational wealth, that sort of thing. We've been doing this now. We actually started during COVID when everyone was panicking, so we helped a lot of people. But what we realized is that generally people will not, nor will they ever actually do research, right? And retail investors don't want to do research, right? Some of them will try, they'll give it a go, they'll see how hard it is, and they give up. Then they start investing blindly, right? So the reason we built InvestorIQ to be more of an automated back end system that does all the work for you, especially on the risk side, is because we generally know no one's gonna do this. Like us here on this podcast, we're kind of data geeks, right? We kind of live this stuff and like it. You go to your actual, your normal 9 to 5 worker who has a family and kids, and they're not going to do any research. So, but they
Yeah.
still want to invest. And they want to invest, comfortably. So the whole point with Investor IQ really is to introduce that risk feature, but abstract it away. Now, if they want to learn about it, the system, we'll have tutorials and we'll have the documentation, and they can go through and learn about it if they want. But the system will do that. Will do all of that for them. But again, if they want to learn all about it on their own, they can. But I know generally most people are not going to do the research. That's why Investor IQ really does it for them.
Right. Yeah, it's like, if you have a full-time job that's not doing investment research, you're not going to want to take on another full-time job doing investment research, even though
No.
it's
Mm-hmm.
obvious you should,
Yep.
right? Like you don't buy a house without doing some research. How's the neighborhood? Where's the schools? That kind of thing. But because people are busy
Mm-hmm.
and they still want to invest, you've basically put a safety rail around it so that they're not just going to go in blindly.
Yeah, and we've been conducting end user interviews, and a lot of this became clear when talking to people. Some of the interviews might be with more advanced investors, and so they start rattling off all the characteristics that they look for, and they might have a process, a research process. But most of the interviews have been people who, like Leon said, have a family, kids, doing a lot of stuff, and they're like getting information from their coworker or a
Mm.
trusted friend or their neighbor or somebody, they may be in a Facebook group and people are talking about something. So, they're blindly investing, or they're doing quick Google searches just to see what maybe the news looks like or the trends look like.
Mm.
So we are trying to educate while also presenting quality, what we call quality stocks. But a lot of it, going back to that abstraction, a lot of it is how do we make the interface and the experience um, very easy to digest and actionable for the end user.
Right. Yeah. You think about the way a professional of uh, if they're an athlete or if they're in, construction, they operate very differently than an amateur in that profession.
Hmm.
That's why one's a professional and one's not. The kinds
Yeah.
of things, like I would never imagine someone working at a hedge fund is like asking their neighbor about, hey, what did you do yesterday? I'll go into work today and I'll put $100 million on it because you really
Yeah, that's right.
like the behaviors are it's so nonsense when you think about it that way. So you've got this
Mm-hmm.
tool, and it's I haven't heard of anybody who's put this much work into understanding retail investors and researching them. It's just everybody says there's a lot of them now. They came out of the woodwork. We've got this huge group, and nobody's really thought about what they're going through with the failure of, okay, I got into this, it didn't work, I lost a lot of money, now what? You could just quit. But the ones who want to stay with it, they're going to have this tool. So you've got this AI on the background. It's sorting through massive amounts of data, making it easier for these people to make better decisions and manage their risk. You're in alpha mode. How are you going to find them? Are you going to market to them, or is the plan to get them in testing? Do you have what's your go live strategy?
Well, right now we have like an alpha um, application, and as I said before, we are conducting end user interviews. We're going to do kind of a closed alpha rollout to a set of people to get feedback and kind of refine that initial presentation and experience. And then from there, we're going to do more of a soft launch, and this will be to a broader set of people, get more feedback, prove the concept, and then move from there. So there's a marketing component to it, but we really want to make sure that the first experience is aligned with the type of customer that we're going for before we just open the gates. Because there's a lot of products out there, and the first experience means a lot to keep people around and keep them using. So we
Right.
want to put a lot of effort into
Yeah,
that.
as I mentioned earlier, that I have the kind of side business with a friend of mine where we have a community of retail investors. The community is about north of 1,000 people,
Mm.
and so that's going to be our kind of our initial testing pool. But as Dave said, we're going to roll it out to a small subset initially of them to have them test it, give us feedback, user experience sort of thing, and then we'll slowly roll it out to a larger portion, more of the audience, that more of our community that we currently work in right now. And that's kind of that's our initial rollout strategy. Then we'll get to the whole like marketing and the wider audience. But initially we have a good core of, like I said, about 1,000+ people that we can actually roll out to. Those are people that we've actually been conducting those user feedback interviews with. We've been kind of
Mhm.
finding their pain points as well. So that would be our initial pool of users.
Wow, that's such a huge advantage to have access to that community because I've made this mistake of building things you think people want or need, and then you find out they actually don't. Um,
Yeah, me too.
yeah,
Been
that's
there.
that's not a good experience. So yeah, I think you have a huge advantage over other people who are building for retail traders in that you know a lot of them and you have a very authentic relationship with them. What kind are they surprising you ever when you talk to them and you're getting that user feedback and you're finding out, I mean, I was surprised to hear that they don't like doing research. It's like it makes sense, I guess, but it's kind of shocking to hear it. Like, are they saying other things that surprise you about how they invest and how what their process looks like?
Yeah, some of the stuff.
So me being a
Oh,
really
I'll let you go, Lee.
oh
I
well,
think
go
we
ahead,
had
Dave.
a delay. You go.
Yeah, okay. So for me as a retail investor, um, most of what they said to me was not surprising, because again, I'm a retail investor. I've been investing for about 27 years. I get all the pain points. I just wanted so we were doing the interviews and the feedback to see, okay, am I alone in this, or is this like normal? Are most people feeling these sort of pain points? And for the most part, they were. The things that I was feeling as a retail investor, it seems like most of the retail investing landscape is also feeling. So I wasn't surprised. Me personally, I wasn't surprised by much of the feedback because I've experienced most of that myself. Dave not being a hardcore investor like myself, he may feel otherwise.
Yeah, I was just going to say that a lot of what they said did confirm our assumptions, which is, this whole process has been interesting because as you're developing a product and going through your ideas about what might be useful to people, it's a lot of it can be biased.
Mm.
And even though like we knew there were certain features that people would like and find useful, just hearing from them like their experience, like this is what I do. Like I go to this site and I look at this, and then I go to that site and I look at this. It's really helpful because then it kind of helps us determine, well, what do we present to the user?
Mm.
Like instead of having them go into multiple sites to find data points, these are data points that we can contextualize on our app. So that it has been extremely useful. Some of the points have been surprising, but mostly confirmation and giving us a little bit more insight in how we can present the information.
Wow. I think you have unique information. I haven't heard anybody else mention this is what retail investors do for their process. We focus on hedge funds a lot of the time, like, and they've got their
Hmm.
black box models, and we think about a professional analyst who sits down and they'll read every filing for a company,
Yeah.
and they're reading the notes and the MD&A, and they're dialing into a conference call and they're checking analyst estimates, and it's like I'm going to spend a couple of weeks building the case just for this one investment. It's such a different mindset that I don't think anybody else has that information, um, or that level of insight into retail who's building for them. They just kind of assume, oh, I've got my unique trick that I can build a community
Hmm.
around who want to use this. But then the investor's left with, okay, I'll use that platform and these other five things. Is your vision where that a user or an investor wouldn't have to go multiple places? Is that really where you see it going? Is they could just come here because you've done so much work to understand them, they don't have to spend a lot of time in other places?
Yeah, that's. I mean, the main goal is to be a one stop shop, and but not only to be a one stop shop, to be an effective one stop shop, because as I said, there are tools out there. There are tools that do similar things. I think we're definitely. I mean, from my perspective, what I've seen, we're definitely unique on the risk management side.
Right.
And I've seen no. I mean, most of these tools don't even talk about risk, and if they do talk about risk, it's more around the word volatility. But what does that mean? Like that's just a word that doesn't mean anything without any sort of context. So
Hmm.
we've really done a lot of study and a lot of research into volatility. So yeah, but the point is to be a one stop shop. Uh, you come to Investor IQ, you find out things you need, you go away. If you need to come back, cool. If not, you have all the tools there for that moment in time. And if you need to come back later, fine, we'll be here for you then too. With again, as the market changes, our algorithm will change with it, and you won't see the same things you saw 6 months ago. You won't see the same ones 6 months later because as the market changes, so will Investor IQ.
So if I that leads me to think about the actual trades that the investor is going to make off the information. So they come to your site, they see these risk adjusted rankings that have all this awesome distillation, and they see the penalty box, don't go over here, and they can follow that. How do they interact with their portfolio over time? Would they come back and say, this thing that was a buy for me a few months ago is now doesn't look that great anymore. Like the risk adjusted returns are gone. Would they get out of it? And the idea is that they can actively trade and constantly be updating their portfolio to reduce risk and increase returns.
So we're of the mind that investing should be a long term thing. So that we're not.
Mm.
I've done the day trading thing. I've done the technical analysis. I've done all of it. Like I've done everything. And I've learned that the best returns in this market are made long term. So
Mm.
our tilt is toward long term investing. Now, to answer your question is we're not giving any sort of advice. We're not giving any sort of insight of what they should do. We're merely presenting risk adjusted returns by sector and industry, and then ranking those, and then the user can make a decision. And the reason to me that's important is because I see a lot of these systems that come out talking about algorithmic trading, right? And that, from my mind, has never been successful. Ultimately, when somebody makes a decision, it should be made by the investor because if it's based on an algorithm, the algorithm has no idea that person's suitability. They have no idea where that person
Mm.
is in life. They have no idea what that person's portfolio looks like. They have no idea. They may have kids in college. Like you just don't know, right? So this algorithmic trading thing to me is kind of pie in the sky. I think always think that the final decision should be made by the end user. So if it fits there, if they're in an equity position, they got in via Investor IQ, and Investor IQ does show that okay, maybe those risk metrics have decreased over time. It's their decision. Now, if it's something like say it's Microsoft, right? We all know Microsoft. Say Microsoft risk characteristics drop over a certain amount of time. If it was me, would I sell Microsoft? No, it's Microsoft. Like, I mean, that's a blue chip. I'm never going to sell. So, but that's just me. You Andrew, you may say, "Oh, the risk metrics have changed. Let me get out." That's your decision. So ultimately, we look at it as the decision of when to get out is always based on the user because again, they know their own situation and they know their own suitability.
Mm. Yeah.
Yeah, from the really quick from the feature standpoint, so right now it's primarily a research and discovery tool. There is no integration to actually, um, you know, place an order or anything like that. On our roadmap, we are considering integrating different platforms so you can pull your portfolio in.
Mm.
We do have the ability to build a portfolio internally, but it wouldn't be in sync with your brokerage account. So that's something where there's still a disconnect. So like Leon said, you do all your research in our app instead of bouncing around to multiple websites, but then you make your trades on a different system.
Right.
So that's at the moment that's just the way it's laid out.
Yeah.
And
But
just
it's
the
a
last point on that.
Mhm.
Sorry, just the last point on that. So as Dave said, ideally we would like to pull in investors or users' portfolios from their brokerages. But again, this goes back to our kind of our market research. There are a lot of apps out here that are trying to do that, and
Mhm.
Hmm.
I would say it's a 50-50 gamble, right? So many of the apps that say, "Oh, we pull in your portfolio," so I've logged in, added my information to my brokerage account. It's supposed to pull it in, but it doesn't. Now I don't know if that's
Mhm.
on the app side or if it's on the brokerage side, but that pulling in a portfolio from a third party brokerage, as of today, to me doesn't seem to be flawless. So if it's not flawless right now, and we haven't done the research on why that is, but from what we're seeing, that's not really a really useful feature because it doesn't work all the time.
Mhm. Right. Yeah. So you don't want to be a brokerage. You want to be a research platform
No,
that, yeah, right. Because that's a whole
Right.
different competitive
it's a
game.
whole different ball of
Yeah.
wax. Yeah.
Right, but I think there's a lot of value in the idea that you're keeping the people who use your platform independent. They're not just dumping into an ETF bucket. There are
Right.
people that want to do that, and that's good for some investors, but there is obviously a huge underserved community that want to make their own decisions. They're very independent. They want to pick their own stocks and things like that. And it doesn't really matter the brokerage. What they need is a better tool to make that easier.
Mhm.
And I see there are a lot of tools for folks that are day trading, but I haven't heard that longer term perspective. Can you talk a little bit more about why you think that is, that the best returns are buying now and holding for a long time, and how that relates to that independent minded investor?
There's tons of reports and data out there that shows that there's a correlation between time in the market and positive returns,
Mm,
right? So there is a definite correlation. The longer you hold a position in equity markets, the more successful you'll be. And from my perspective, I think it's just like anything, it's time, right? So if you get in an equity today and it drops, and you get out tomorrow, you've lost, right? If you get
mm,
into equity and it drops and you wait another 3 years, you give yourself time for that thing to come back. Now you hope it
right.
is a quality company. Maybe the reason it dropped is something outside of its control. But ultimately over time, you hope that it comes back. So being in long term, you give yourself time to recover. So there's a saying that it's not about timing the market, but time in the market,
In the
which
market.
is the benefit. So time in the
Right.
market, studies have shown you like that,
I do.
right?
Yeah.
Time in the market is what actually is where the success in stock investing happens. Now, do people make money day trading? Absolutely. The probabilities of success are extremely low. I've done it.
Mm,
I've tried it. I've seen studies. Like I know for a fact it's not the way to do it, right? So, yeah, so we're definitely advocates of long-term investing, risk-adjusted long-term investing, and definitely staying away from the whole meme stock thing, the day trading thing, what have you.
I love it.
And I think also considering our end users or the type the market that we're going after, um, they want to feel confident in the investments that they're making. And so, again, going back to the education piece, and like Leon said earlier, we are tilted to more of a hold for the long term strategy. We think it works well for the particular market that we're going after. In the future, we may consider. So right now, our algorithm and the ranking system is primarily tilted for holding long term, like what makes a good long term investment. But we have talked about having different forms of ranking systems for different styles
Mm,
of trading. But again, that's more down the line thinking.
right. Yeah, you were talking earlier about basically how performance might be driven by different features. So
Mhm.
ROI or different metrics of a company will be very predictive of performance, but not forever. And then
Yeah,
you've got an AI in the background that can say, yeah, there was this correlation there, something was really helping us to analyze an investment, but we can be dynamic and change. I think the short-term traders forget about that. They're like, we got something
yeah.
that works until it doesn't, and because they're not
Hmm.
in it for the long haul, they're trying to do these quick short gains. They don't have the ability to pick the right features all the time, and eventually they get burned.
Right. Right. And what's crazy to me about that is, and again, I did it. I was one of the crazy people at one
Me
point.
too.
Is you do, right? You
Yeah.
literally have to be exactly right in a very short window. And like,
Mm,
what are the probabilities, the odds of that happening? What about probability, the odds of you being exactly right in a 5 minute, 10 minute? 24-hour window. Like it's just that's not the way the world works.
Mm.
So I learned the hard way. That long term investing is the way to do it. But it's like when people's accounts are blown up, they still go back to it. I've never understood that mindset of like you lost all your money, but you're going back to do the same thing that lost all your money. You're not even trying to evolve and change with the market and in different strategies. So, but yeah, our target is definitely. But as Dave said, and it's kind of a thing I had to get out of my own head. And Dave's made this point to me numerous times, which has helped me. Is like this thing was built. I originally designed it for myself. I was made aware that this can actually help other people. And I'm a long-term investor, right? That's what I do. But I'm not the world, right? So there are other people that may want to do other strategies that eventually, as Dave said, we're going to look to build into the system. It could be day trading, it could be centered around ETFs, what have you. But we definitely want to have the system evolve and not just focus on what I do or what one subset of investors do.
Yeah. I like the idea of long-term investing myself. That's how I do it now after being burned enough times. But I think people like to listen to folks like Warren Buffett. And I think when you are a long-term investor, you're getting the advantage of everybody who works at that company you invested in working on your behalf to try to be successful, to improve that business. And a business is susceptible to short-term things outside of their control that if you're only in for a minute or an hour, interest rate changes, companies' sales go down temporarily. But if you're in it for the long haul, you're investing in people who are there to work on your behalf. So I think it's a winning
Yep.
a winning strategy for that segment of the market you're going after. Can
One
you?
one other one other
Yeah.
one other point, just real quick on the returns portion of it. So, you'd mentioned earlier, how people work, or I think we both mentioned it. So this is another kind of thing we found out through our studies, and really just kind of the years of me being investing and talking to people, and having again a friend of mine who was a financial advisor. So like people mostly invest through their 401k through their retirement plans, right?
Mm.
And while that's great, I mean everyone should do that. The returns of those are typically way less than the market, right? Like way
Mm.
less, like way less. I mean, sometimes they can be, below. Some of them get 5, 6, 7% per year, if that, right?
Right.
Now the market on average returns 10% per year, but if all your money is just sitting in a 401k retirement plan, and that's where your investing dollars are going, you are greatly underperforming yourself as well as the market. So,
Mm.
so another thing, and again, we're not knocking in any way knocking retirement investing. Everyone should do it, but there should also be some money that's also giving yourself just a little bit more risk, a little because you can get a little bit more return with that. So I've always been an advocate of yes, always do 401k investing, always do retirement investing, but understand you're going to greatly underperform the market over the long term. Whereas if you take a little bit of risk, a little bit more risk with your own money, you can greatly outperform your retirement account. So it's kind of the barbell thing. You can weigh both sides. But people definitely, I think, especially retail investors, definitely should have their own brokerage account where they're investing their own money through a system like InvestorIQ, that will expose them to responsible risk versus
Mm.
almost like no risk in your 401k and retirement accounts.
Yeah, it's another form of diversification, actually. If you're in supposedly you get
Yep.
diversification from ETFs, right? It's very broad, but you're not diversifying your risk profile. You're actually shrinking it,
Right.
which reduces the returns. And you said a word there that I like a lot, which is system. I think that's the gap that a lot of these folks have that you're filling is they didn't have a system for making data-driven, risk-adjusted decisions. They just went for it, on no system. And
Right.
so, if folks are looking to do something smarter and keep that risk as part of their strategy, investoriq.ai all day. Can you guys
Hey.
talk? Yeah, can you talk a little bit about the process, this data process? This is where Intrinio fits in. So I'd love to get your thoughts on, trying to do this innovative business project to help investors in the retail space. What was the data that comes in and you manage it? There's actually a really great infographic of it on your site showing all these different data sources coming in. Can you talk a little bit about the experience of getting data for this platform and what that was like?
Yeah, it's been
Real,
an
real,
iterative.
real, real quick before Dave, I know I was like Dave gonna jump in on that one, but
Okay,
real quick
okay, go ahead, go ahead,
before I
Lee.
just want to say why we ended up choosing Intrinio, and so it really it's kind of an interesting story. So it goes back to I saw your CEO. I was doing research on looking for data providers, And I saw your CEO on a I think it was on YouTube. And what she said wrong just rang true with me. The cost of data from these data providers, 20, 30,000 a month or whatever ridiculous number it is that her and her founder saw when they were building that initial like scraping app back in the day when they started the company, just hit me like a ton of bricks because I was like, that's exactly what I'm saying. Like you call these big providers and they're saying, oh yeah, it's $12,000 per month. And then when you look at the costs, it's just raw data. A lot of times it's just literally raw data. All the calculation has to be done on your end. One thing I loved about Intrinio was how I'll tell you this, your data tags, genius. Like that data
Yeah.
tags feature is genius because you do all of the heavy lifting a lot of the heavy lifting for application developers, and we just call the tag and then maybe do some calculations around it. But a lot of the initial lifting has been done. So just real quick, that's why we really wanted Intrinio was your CEO just rang true with me that ridiculous cost of data today. All right, Dave.
I was just going to say, like, it has been an iterative process. So when we first started, Leon had the whole system mapped out using spreadsheets. This was his system. He would make his trades. He would, go to multiple sites and store the information in spreadsheets. So the first iteration, we took those spreadsheets and made it into a UI app, UI web app, and then we got an Intrinio account. I think we were using at that time. We started with R, and I believe we were like at 0.7 or 0.8 of the API version, and it was working really well, but there was some stuff that were missing, and we would contact support, and they'd be like, "Oh, like yeah, that's something we're working on." And so we were like a very early adopter of the R API side, which was a lot of fun going back and forth with the support team. But yeah, so since then, I mean, it's been probably 2 years, a solid 2 years that we've been using the API. We find that it has all the equities data that we need. I mean, I don't think, correct me if I'm wrong, Leon, but I don't think we go anywhere else to get our equities data. I mean, we pull other non-structured data off the internet, but in terms of equities information, so fundamentals and risk and company, and being able to pull all that information and compare and contrast and do what we need to do is very useful. And the value is there as well, because like Leon said, the Intrinio account is much cheaper than the other companies that are out there.
Big time. Yeah, and
So
Intrinio's our only data source.
That's great.
yeah, yeah, it is. We pull that information in and we merge it with other data, and then like Leon said, we have a kind of a pre-screen process that weeds out and penalizes certain equities, and then we have a ranking system. So it takes a lot of data, years worth of data, and then it does the ranking and then stores that where that information can be presented on the app. And again, this system continuously runs daily to repeat the process.
Your experience is sounds so familiar because Intrinio actually, I don't know if a lot of people know this, but it started with a spreadsheet DCF model, discounted cash flow, where probably a lot of the same calculations Leon was running, and it was we were trying to automate that. Okay, then we're going to turn
Yeah.
that into an app. And the app, I've got old images of it and stuff. It was called Valuation, and it was just took what was in the spreadsheet, put it in an app, you put the ticker in, and then it does all that same stuff. But when we went to get the data, it was too expensive. And you think about the folks you're trying to serve. In my mind, if you have to pay $20,000 to $50,000 a year to build your in an analysis platform, what are you going to have to charge the individual retail trader? They're just not
That's
going to.
right.
They're never going to be able to afford it. And then
Right.
what you're doing wouldn't be possible. So you feel like that you can pass the savings on a little bit to the end user versus
Yeah,
them buying a Bloomberg
it's
terminal.
definitely an enabler because, like you said, that pricing makes it. I mean, we could potentially do it for us or for a close group of friends that can make some money off
Mm.
of it. But trying to charge people who already don't really know a lot about trading or what to look for. I mean, it's a steep it would be a steep sell to them to say, hey, you got to pay $200 or $500 a month for this thing.
Right.
So
Yeah, if you have to start out with a Ferrari, not very many people are going to get into driving, and
no.
there are terminals out there that the typical one I think of is a Bloomberg terminal. Then
Mhm.
that's what every professional trader who has all the time in the world and their job is to do nothing but research. They're paying $2,000 a month everywhere,
Yeah.
right?
And they know what to look for. They
Yeah.
know they get in there, all the information makes sense to them, and it's not overwhelming. But that's not for the market that we're going after.
Right. It's good to hear that the majority of the data a retail investor needs to make better decisions, risk-adjusted decisions, is what Intrinio provides, because we're doing that on purpose. There are
Hmm.
lots of other data sets that can add alpha or something if you're a quantitative hedge fund. But we wanted to have the data sets available that you do need to look at. You need to look at a fundamental data set, balance sheet, income statement, to make it's called fundamentals, for a reason. So
Right.
it's good to hear that is actually where you wanted to start, in pulling that data in. And it's also nice. I was probably on the back end of those R conversations because I'm a dedicated R user myself. That's a whole show maybe to talk about that. But is that the thing I like about working in R is once I get the data, I now have the independence to analyze it the way I want to, and to automate. At least my analysis can be rerun as often as I need it to rerun to get to the decision information that I need. Is that how you think about the back end of your app? Is that like kind of like an R script would be? Data comes in, we perform our analysis, and we get the output, and you've got the flexibility and control in the middle because everything's coming in over API.
Yeah. So we actually have. So the way we think about it is the data. So in the beginning, when we were first building this thing out, we were just pulling the data and doing some exploratory analysis and trying to figure out like how can we take this thing and systematize it. Um, Now it has been the whole system, the whole process has been made to be automated in the cloud. But we do still pull data down manually, quote unquote, manually to do our own analysis. And as we find things, we may want to tweak the model or do other things. We will add that or put that into the production model. This is aside from the AI that runs.
Mm.
So we part of it is a systematized process, but the other part is us continuously doing some refinement and trying to understand the data ourselves
Mm.
versus just having some, black box out there that's doing something and we don't know what's going on. Um,
So you're getting the benefit of your experience. I mean, we talked about it at the intro, but between the two of you, we're talking 50 plus years of experience and counting. So you're in there looking at the data, analyzing it, and that allows you to build in that what you learn over time. So you're going to be kind of behind the scenes, continuing to do more research on behalf of your users.
Yeah, that's correct.
Yeah.
Because we want to keep refining the model over time because the market changes
Mm.
and the things we were thinking about 6 months, 9 months ago, may not reflect the best risk reward profiles of today.
Right.
So yeah, and we continue to do a lot of stuff in R. We are slowly moving towards the Python API, primarily for the production system, just because it's a little bit faster. But we still do our analysis internally all in R. I find the analysis moves a lot faster using the R language.
Hmm.
Just particularly with, I know you're R user, so you're familiar with like the tidyverse ecosystem, but the tidyverse library ecosystem makes um, data analysis a lot faster, in my opinion, than Python. So I do enjoy that. But uh, once we finalize the models and whatever code that's going to go to production, that part is rewritten in Python and then put into like functions in the cloud that run by themselves.
That's my experience as well. So I find that my exploratory scripting and analysis in R is great, and I'm working on my own R or Python ability because Python seems to be the way you go towards in production, and it seems like it's got a lot more longevity because it's more heavy hitting to on the
Yeah,
as a developer language.
yeah, and a lot of people get caught up in these programming wars. I'm more of a pragmatic
Yeah,
programmer, so like whatever works for you, whatever gets the job done, and then when you hit its limit, start looking for some other things because there are some shops who will like they'll be doing everything in Python, but then rewrite it in Java or C to make it
sure.
faster. Whatever's going to be in production. So just use what you have and what can get you to take that next step, and then switch it up when you hit a limitation.
Yeah. Well, I love talking to you both about data. I feel like we're all in the same camp as data nerds. We're talking about retail users who are like don't have time to do all this research, and if that's all I would do if I could.
Yeah,
So it's awesome to talk to you. I love hearing about the platform and the benefit you get out of Intrinio, but also all the thought that goes into helping the retail traders that are really looking to improve and make a better life for themselves by getting better returns. The platform is InvestorIQ.ai. Thanks for being on the show, Leon and David. It was an awesome time talking to you.
Great. Hey,
yeah. Thanks for having
thanks
us.
for having us, man. We really appreciate it. That was a good time.
Yeah, lots of fun, Andrew. Thank you.